Hello, everyone. BigBear.ai Holdings, ticker symbol BBAI, is one of those companies sitting at the very intersection of national security, border technology, and applied artificial intelligence. These are areas where money doesn't flow in a straight line. It often comes in waves. Sometimes funding dries up, but when it hits, it can pour in with massive force and completely change the trajectory of a business. That's exactly the type of environment Big Bear is trying to thrive in. Now, if we take a step back and look at how the stock has performed, the first half of the year was anything but smooth. The share price experienced strong volatility, spiking early in the year before pulling back to reset at lower levels. But that pullback also reset the company's valuation, which today sits well below its earlier highs. That's an important point for investors. When valuation multiples contract, it can sometimes create fresh opportunities for those who are willing to balance risk with potential upside. For example, Big Bear's forward 12-month price-to-sales ratio currently sits at 11.8. Compare that to the industry average in the broader Zacks Computers, IT services category, which is closer to 17. That gap suggests Big Bear is trading at a relative discount, at least compared to its peers. But if we zoom out and place Big Bear against other names in the AI and defense tech space, the picture gets more nuanced. Take Palantir, ticker PLTR. Palantir is the heavyweight in this arena, with deep government integration and a long history of securing mission-critical analytics contracts. Investors reward that dominance with a huge premium. Palantir trades at nearly 79 times forward sales. Big Bear, meanwhile, is nowhere near that. On the other side, if we look at C3.ai, ticker AI, its forward sales multiple sites closer to 7. So Big Bear finds itself in the middle, more expensive than C3.ai, but far cheaper than Palantir. Now, why does that matter? Because in many ways, Big Bear is competing directly against these firms. Palantir's edge lies in its embedded relationships with the Department of Defense and intelligence community, where it's already a go-to partner for analytics. C3.ai, for its part, has carved a niche in predictive maintenance, logistics, and defense readiness, all areas where Big Bear is also trying to expand. So, the challenge for Big Bear is steep. They're going head-to-head with companies that already have larger reputations and broader reach. When we move from competition to recent performance, the story gets even more complex. Big Bear's second quarter earnings report for 2025 was disappointing. Revenue came in below expectations, guidance was lowered, and losses widened. That cocktail of negative news sent the stock lower. But markets rarely move in straight lines. After hitting bottom, Big Bear shares actually showed some resilience, clawing back momentum in late August and into September. By September 12th, the stock had risen to about $5.06. That rebound suggested that the initial panic may have been overdone and that investors were starting to reassess the worst-case scenario. Over a 3-month period, Big Bear's shares actually climbed over 22%, which outperformed not just its industry, but also the broader technology sector and even the S&P 500. Looking at the bigger picture, over the past year, the stock has surged over 220%. That kind of return is eye-catching, though it comes with plenty of volatility. One reason the company can survive these ups and downs is its balance sheet. At the end of the second quarter, Big Bear held nearly $391 million in cash and cash equivalents. For a company of its size, that's an unusually large cash pile. Add to that a backlog of $380 million in contracts, and you have a business with both liquidity and visibility. That liquidity buys time. It gives management room to invest in research and development, to weather delays in federal contracts, and even to pursue mergers and acquisitions in areas that could deepen its competitive moat, things like computer vision at border crossings or orchestration technology at the tactical edge. At its core, Big Bear's technology is designed for one thing: real-time decision intelligence in environments where accuracy and speed can't be compromised. Think about border security, port operations, or defense networks. These are places where mistakes are unacceptable. Big Bear's platform, called Conductor OS, is particularly interesting. It's built to orchestrate data, sensors, and AI at the edge of the modern battlefield, helping coordinate everything from drones to surveillance systems. As defense programs scale from small pilot projects into full production, demand for this kind of orchestration is only likely to grow. But beyond the tech itself, what makes Big Bear especially compelling are the policy tailwinds. Earlier this year, Congress passed what's being called the One Big Beautiful Bill, or OB3. This bill represents a generational level of investment in the very areas Big Bear is targeting. It allocates $170 billion to the Department of Homeland Security, including more than $6 billion specifically for border technology and over $670 million for biometric exit solutions. At the same time, the Department of Defense is set to receive $150 billion, with tens of billions earmarked for AI autonomy and shipbuilding. Big Bear is already embedded in these sectors. Its biometric solution, called VeriScan, is deployed across more than 25 airports on over 2,000 devices. Conductor OS has already proven battlefield utility in exercises with drone swarms, and its shipyard AI product aligns directly with the shipbuilding funds in OB3. This alignment with funding priorities gives Big Bear a strong first-mover advantage. Of course, contracts don't always arrive smoothly. The company has faced turbulence from certain Army program consolidations, which hurt near-term visibility. That's why management was forced to lower its 2025 revenue guidance to the range of $125 million to $140 million and even withdraw its EBITDA outlook altogether. The problem here is timing. Federal modernization efforts often create long-term opportunities, but in the short run, they can disrupt revenue recognition. This makes Big Bear's financials lumpy and unpredictable, which in turn suppresses its valuation multiples until execution catches up. That's not to say Big Bear lacks traction. The company points to a sizable backlog and multi-year awards like the GFIM OE production contract announced in late 2024. These long-term deals indicate that customers see Big Bear as a partner worth sticking with. Execution against this backlog will be the key driver of visibility into 2026 and 2027, more so than any single headline announcement. And Big Bear isn't just focused on the United States. The company has been expanding internationally as well. A massive $1.4 trillion AI partnership with the United Arab Emirates highlights global demand for its security and infrastructure products. In Panama, Big Bear launched a cargo security solution in partnership with Narval Holdings, opening the door to broader opportunities across Latin American trade networks. These deals diversify revenue streams and reduce dependence on the U.S. government. That said, profitability is still an open question. Adjusted EBITDA losses widened in the second quarter as research and development expenses weighed on results. While the cash cushion gives Big Bear time to refine its operations, investors will eventually want to see leverage from scaling projects and a shift back toward higher margin work. Until that happens, earnings will remain weak. Analyst sentiment has reflected these concerns. Over the past 60 days, consensus estimates for 2025 earnings have worsened sharply from a projected loss of 0.41 per share to a much deeper loss of 1.10. That trend suggests cost pressures are building, and profitability may not be around the corner. So what's the bottom line here? BigBear.ai's second quarter results exposed just how volatile life can be when you depend heavily on federal contracts. But they also highlighted the company's strategic advantages, massive cash reserves, direct exposure to historic levels of AI and defense spending, and growing international partnerships. For investors, the message is clear. Big Bear is not a short-term earnings play. Near-term visibility is clouded by contract resets, widening losses, and uncertain guidance. But as a speculative long-term bet, the company offers asymmetric upside. If its backlog converts, if federal funding accelerates, and if global partnerships expand, Big Bear could be well-positioned to capture enormous value over the next several years. It's not without risk, far from it. But for those willing to stomach the volatility, Big Bear remains a fascinating story at the intersection of AI, security, and national defense. This is not financial advice.